Welcome. So in this tool, we're going to navigate using the Budgeting and Variance Analysis tool, simple version, which is available under the Variance Analysis section of the Indigenous Fiscals tool at the very bottom where it says Free Tools. Okay, so now that we've created a budget and we have started transacting through the year, various transactions have occurred in revenue and expenditures. And what we should be doing in our finance department or in our departments is doing a variance analysis and understanding what actually occurred compared to what we thought was going to occur and understand how is that going to impact our year end. Okay, so this tool is developed to give you a comparison to the budget and against the actual items that occurred throughout the year. Okay, so there's an instruction section again, first tab. And so this tool was designed by Orbis Risk Consulting and provided to AFOA to be shared with its members and its students. And so if you have any concerns with using this tool, it's best to reach out to AFOA Canada or Orbis Risk Consulting on this email that's provided. Okay, so they have a little bit of instructions here on how to enter your information. Where to update it, similar to kind of our other budget draft template. If you recall, you go to the input section down here and we change some of these items based on our current year or what we're working on. Okay, so prepared based on actual results as of whatever month you're working on. And so during preparation of this, it was September. So we'll say that we prepared this on September 30, 2025. And it's for, again, I use Onion Lake Cree Nation because that is where I am from. You may use whatever nation you're from where you work. The fiscal year is 25-26. And now when we go, the information is populated automatically, just like our other workbooks that we have. Okay. The difference with this one is that it allows you to add actuals and it allows you to do variance analysis. And some questions that you'd want to ask yourself are these ones here. Are all the expenses included? Utilities. Have we entered all of the invoices that we thought we were going to receive? Are the expenses in the right accounts? Was there perhaps some incorrect accounting entries that were done? Are expenses in the right period? Did we record the expenses in the right month that they should have occurred? Were our budget assumptions wrong? Did we think that we were going to spend more than we did, or did we spend less than we had budgeted, etc.? Invoices have not been entered or paid. Is there some things that we know as a director, as a program manager, I spent that. I sent that invoice in. Where is it? That's a good time to see. Has it got entered? Maybe it went to a different department. Maybe it went to a different program. What about salaries? Maybe we're allocating these out to various projects or departments within our organization. For example, health. You might have nurses that are under prenatal, under co-high, under diabetes, whatever you might have. Are all of those salaries allocated to each of those departments properly? What about admin? Is there any admin cost that needs to be recorded per your funding agreements? Are staffing levels different than we expected? Did we staff up more or did we not build up the team as quick as we thought, leaving a big surplus in salaries and benefits? What about automatic payments, pre-authorized debits, for example, the utility bills or cellular phones, vehicle payments if you have those? Have they come out of the bank and maybe not gotten entered yet? These are good questions to ask when you're doing a variance analysis. Okay? So they have some questions there that you can ask while you're building this. Now let's navigate a little bit through it. So under the summary core program, this one here is it's a summary sheet, so it feeds from the other data so long as it's linked properly. That's critical. If you have any questions with the linking of these sheets, please be sure to check out our other video, which talks about repairing some of these broken links and how to make sure they are linked properly within your document. And the reason we have that extra video is because if you make one change here, for example, this 1000 is in your department and you call it 101 admin, the link will not work. Okay, so there's another video specifically identifying how to change this here, this hyperlink, which brings me to admin. But if again I change this title, this link will not work. Okay, so it's very important to make sure these things are named correctly and properly linked and set up. So again, if these links are not working, please be sure to check out our other video that says how to repair broken links. Okay, it's a 3-minute video. Okay, so this is a summary sheet that kind of groups all of your main core funding programs within the nation, typically aligned with Indigenous Services Canada funding. And so these are driven from these other reports here, which we'll go through. And then these proposal-based ones are more separate ad hoc, maybe 3-year funding, maybe 1-year funding. Maybe it's non-ISK related. Maybe it's funding from another source. Or maybe there's something that's unfunded and we're using own source money, transferring in from other programs. Okay? In other words, they're just project A, project B, project C. But again, if we make a small change to that, this link will not work. Okay? So I want you to be sure that you watch the video on how to connect these links if they're not working properly. This report will work great if the links are working properly. So it's very important to understand that. Okay, so let's go into what is the variance analysis. So we go to our first one, which is our admin. And again, it says sample data, delete this. So we want to delete this text box, right? If right now we're selecting, you notice there's this dotted line through here, through on the bottom of the box that goes around it. You have these big white dots, but right on the edge, it's a dotted line. This is saying we're selecting this text, okay? We want to actually delete the box. So you have to click again on the outside edge, where now it's a solid line around this, and then we can click delete, okay? So in these sections here, and again, these are roughly summarized expense accounts that you might have in your department. If they don't work, then make sure you add them by going right-click, insert. Now, be sure though, if you do that, whatever you add, say it's repairs and maintenance, that you go back to this core program and you add repairs and maintenance. And again, we're going to have to link it. Okay. So it's important that whatever you change on each one, you change on the core and everything is working properly. Otherwise, you could enter things in here and it doesn't come to the core program when we perhaps print this as a cover sheet. So we're inaccurately reporting. Okay, so if you can make these ones work, use these ones. That way you don't have to make many changes. So what we're doing here is we're going to record from April through whatever month you're at. Right now we're saying we're making this as of September 30th. So we should have April through September in actual expenditures. Okay, so let's assume that we have $50,000 in here for wages. Pretty simple. And so we're going to assume that that's all the wages that we have in this department. Every single month has been the same. Okay. And we're going to assume that we made a budget of $250,000, or sorry, not $250,000, $500,000 for our wages and benefits. Okay. So what this shows us is that as from April through September, we have spent a total of $300,000. Our budget was $500,000. And what that's telling us is that we only have $200,000 remaining in our budget. Well, if we continue going on here, we're going to go over budget. Okay, so if we had $50,000 for the rest of the year, we're going to be $100,000 in the hole. Okay, so that is the importance of looking at this early on to start identifying where can we move money around. For example, let's say for meeting expenses, we had $25,000 each month. And again, simplistic sake, we had $25,000 each month. Okay, right now that means we had a total of $150,000. And let's say we budgeted $400,000 in here. So this is saying that we have spent $150,000. Compared to our budget, we have $250,000 left. If we assume we're going to continue spending $25,000 to the end of the year, that would bring us to a total of $300,000, leaving us a surplus of $100,000. You may recall, if we continue spending the salaries that we've spent, we would be in the hole $100,000. This is a good time for us to think, okay, maybe we can do a budget amendment. Maybe we can say, you know what, we're changing this to $600,000 and we're changing this to $300,000. And we would do that in a mid-year budget adjustment, okay? So what you would want to do is come back to leadership with a new budget and comments within what you are making changes to, okay? This is a good tool to use to represent it, but when you want to present to council, you probably just want to see these two columns, okay? Because they're going to want to see something simplistic and a very quick answer as to why we're making a change on that. So it's always important to keep it summarized. If we put all of this data in here, sometimes it can make our users get lost in the data, and we don't want that to happen. Okay, quickly looking now. So when we have the data in here, and assuming you would have had more data in here, looking back to our summary sheet, we can see now that we have $300,000 in admin salaries and benefits. We have $150,000 in meeting expenses. That compares to what is actually occurred. That isn't due with the budget or the variance. That is just what has occurred. Okay? And so when we look back, we can see it just totals everything up from all of these columns here. So once we populate all of this data, we'll have a grand total that we can see where are we at for actual. And what it also shows us is our budgeted surplus. So of course, right now we're in a budgeted deficit because in that program, we had no revenue, okay? We had just that. So if we had said, oh, actually, we have $900,000 in revenue, then we would break even. So let's just populate that just to say we have that, just so we can show you what that would look like on the report. And again, we don't know. We expect it's going to come in, but we don't know the actual yet, okay? But what this does tell us is on track. We're just waiting for a wait-in. We'll correct that. Waiting for our final payments to come in. So now if we go back to our summary, and I always click here because this is a hyperlink back to that summary core programs. So we can see we have received $450,000 and we see our expenses of $450,000. Wow, this program is managed really good. So we have a total expenditures of $450,000, total revenue of $450,000, showing our actual surplus to date is nothing, and our budgeted surplus is nothing, and our budget's actual variance is nothing. So let's assume we haven't received a lot of our money up front. Let's assume that we receive at the beginning of the year, we got $150,000. And we got another $150,000 here. And we're expecting to receive our final in March. Okay. Which is actually 600,000. My mind is not working correctly right at this moment. So to date, we have not received this. So we'll say that that's blank, but we're going to assume that we're going to receive that in March. That's why it says waiting on final payment. So to date, we've received $300,000, $150,000 in April, $150,000 in September. We had budgeted $900,000. So now if we go back to our summary here, this shows us we've received $300,000, but we've spent $450,000, leaving us an actual deficit right now of $150,000. And so ideally, when you go through all of your programs, this should be a positive number, meaning that you could have a deficit here, a deficit here, and a deficit here, but a surplus here, and a surplus here, and a surplus here. What's actually happening is that you are cash managing your expenses within your department. Okay, so what that's showing you is that your nation is using other revenue from other departments to offset this deficit at the moment. But it's helpful for management to track this, start to see near the end of the year how tight these numbers get, meaning we should have less deficits and surpluses should balance. And at the end of the year, for the entirety of the nation, we should be at a net zero or a surplus position, which is going to be difficult in many First Nations. Okay, great. That is all I have for this sheet, and we will talk about another one on another workbook.